in business in the first place. If there's not a reason to do business here, then we shouldn't be looking. It's just going to waste our time. It's going to use up a lot of our energies trying to find trades that we shouldn't really be looking for in the first place. In other words, we build a narrative. When we build a narrative, we start looking for the trade opportunity. So let's take a look at what Max was telling us about this bottom edge here very briefly. So one of the things we started to recognize in here is that the market maker was quite clearly on the cap, wasn't they? The market maker was capping this phase. And then we started to get the parallel shift coming in at this stage, but the market maker is still capping this. You can see that there was a very easy walk out of the pin zone up at the top edge here. And obviously, if you were to do what we've told you to do when we hit a pin zone, is we highlight the highest value candle, and we highlight the highest value candle, and the pin zone becomes this price level here, doesn't it? So there's your pin zone high price right there. So obviously, we would be looking for that to try and get short. Well, you can see what happened in here. Look, the market maker was obviously coming out. They tried to come back in here, and obviously the idea of that is that they are now selling this at the top edge. So that was a great sell-off right there. Well, we got that oil short against a lot of the better judgments that we had about being long oil, of course, at that stage. But the short was pretty good. We got in at 80.05s. We got down to 65s for $400. Took profits aggressively. We started to recognize that we had this MIT level at the bottom edge here at 79.60s. And of course, we started to see some sell side liquidities into this bottom edge as well. Market maker capping it to try and hold the price offered for as long as possible and allowing us to buy into the bottom edge. And obviously what happened at the bottom edge held beautifully. And then we got the breaker. And as soon as we got the breaker, look, red line, black line, parallel. That's big news, guys. When the red line and the black line are parallel, this market is not going to stop anytime soon. We get involved in that as a drive. And obviously we got a beautiful little drive back up to this pin zone where we had the pin zone the last time. And again, as you can see, it's a very nice, easy to recognize level from the background as well. Market maker stays bid in here, which is one of the reasons that encouraged me to buy back into this, because the market maker was staying bid on this pin zone at this stage. So obviously from that point onwards, it was just about reading that value, because remember the value kicked off big style during that phase. Value was really, 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 really bullish. And obviously with the value really bullish, well, guess what? We're going to make a lot of money if we stay on the buy side. Now, this is the kind of thing that you've got to make sure you understand about your trading. Keep that bloody finger off the exit button. Unless you're a multi-lot trader, should be nowhere near exiting this with value significantly still enhanced to the upside, right? And this is why the vast majority of retail traders don't make money, not because their analysis is wrong, but because they can't keep their finger away from that +1 button. Every single time you get into a +1, my God, I better take it, right? I'm going to lose money if I don't take it. Well, you're going to lose money if you do take it every single bloody time, because you get one loss and you're going to have to hit 90% winners just to break even. Do you know what I mean? You're not going to hit 90% winners, guys. It's unrealistic to think that 90% winners is in your portfolio at this stage. So get away from the button. Leave it alone. I know it's difficult because that profit is that profit, but you've got to find a way to get away from that bit of business, right? It's as simple as that. You've got to find a way to get away from it. Now, you might be wondering about what happened up here. Well, obviously, at that stage, we started to see on the trade log, looking at oil, of course, on the trade log, you can see what happened in here. At 11:39 London, you can see that there was a commodity fund started to sell into the oil hedge, okay? So obviously, if there's a commodity fund starting to sell into the oil hedge, that was at 11:39, which will be your 11:35 candle. Well, we can see that seller, can't we? Look. So the 11:35 candle was this blue candle here. Well, that was my exit price. Do you see it? So that's my exit price, because we started to see that commodity fund starting to offer into that price level. Now, we don't know if they're offering into that price level to close a long position or to get net short. Well, if it's a commodity fund, it doesn't look like they are selling it to get net short, is it? So that looks like a profit take. Do you agree with that? That sell looks like a profit take. It's not a short sell, but it's still something that we can note. It's still something we can take advantage of by closing out some of our long position, or at that stage, all of our long positions to see what happens next. Now, I didn't close out all of the long positions. We did a great level, of course, in the background. So we did close out some of our position. But the idea is, of course, we need to see what's going to develop next. And what's going to develop next is going to try and figure out what are we going to try and get next into the narrative. Are we buying the dips? Are we getting sell the offers? What are we going to do next? So it's all about the value story, isn't it? We're trying to build the story around this. And obviously the idea of getting into the right trade at the right price following that, we're now moving into sort of 20 past 12. We'd still seen some selling pressures coming in on the oil. The value was starting to go bid at this stage. And it looked like we were ready to start catching another little swing higher, which is exactly what happened. And remember, when we come into these areas, we're still looking for those buy opportunities, aren't we? We're looking for those buy opportunities. We saw a lot of block trades started to kick off about 1 o'clock today as well. So when we get into the trade idea, it's not about just one single piece of a jigsaw puzzle. We then start watching to see how this trade here is going to play out, right? We start looking at this as a storyline up here. I don't like the idea of selling at any price at the moment, do you? Is there anybody who likes the idea of selling this at any price at the moment? No, right? It's pretty straightforward. So when we look at how pretty straightforward it is, we actually had this view from a long time ago because we saw what the oil inventory report was forecasting, and we had this bullish view on oil, didn't we? Did we not? Yes, we did. So are we agreed that we had this view for a while? Are we cherry picking this stuff? A lot of people coming into the classroom, they think that a lot of this stuff's cherry picked. But the good news about what we do is, of course, is that we post our narratives on the Twitter. So you can see our post on the Twitter, and you can see the timing of our post on Twitter was at 10:57 last night, 16th of July, 10:57 London time last night. This picture clearly shows the power of the short-term value, which helped drive the oil drop again today. Short-term value driving the oil drop on this macro chart here, right? It doesn't take away the macro long at any stage, because the macro long, the price of oil is still heavily discounted. Is there anybody that doesn't think the oil price is heavily discounted against the swaps here? Anybody that doesn't think oil is heavily discounted here? It doesn't mean we can buy the entire drop, because the short-term value is dropping, Greg, right? So with the short-term value dropping, the price will drop. I mean, it's as simple as that. It doesn't take away the macro. But what happens, of course, is it doesn't take away the macro. So we always look for the short term to flip and join in as early as possible. And at that stage last night, we've got an oil fair value of $81.50, haven't we? That was last night. We had an oil fair value of $81.50. Now, obviously, coming away from that as a storyline, it becomes pretty obvious about what's happened since then. You know, from the last night's trade, we were waiting for that short-term value to flip this morning. Obviously, London session open is always going to be our entry price. And as we hit the London session open here at 720, we're ready to annihilate long-sided oil, aren't we? This isn't not a trade based on a single thing. It's not based on a single idea, is it? It's a trade based on a series of thoughts, a series of ideas, all arriving at the same time. When we think about these as deals, you'll probably start recognizing how good this is as a process. Now, of course, when you're looking at our trade log at 7 o'clock, what was a trade log telling us at 7 o'clock? At 7 o'clock, we had a trade log for the high price, which was miles away. We also had a trade log for the low price. 7 o'clock, if the price is lower, look to bid it. So what are we going to do at 7 o'clock? At 7 o'clock, I am going to look to the left and find where that trade is, right? So there's the 7 o'clock there, right? 7 o'clock right there. I'm going to look to the left and say, right, well, what are they trying to find for me here? So at 7 o'clock, they're trying to find that level there, aren't they? So what we're getting told from the 7 o'clock trade log is that we should see oil dropping down towards that sell side liquidity for a buy opportunity. Is that what trade log told us? Yes, it is. That's exactly what the trade log told us at 7 o'clock. If they manipulate oil lower, look to buy it. So that's, the price is irrelevant, guys. I know it's the contract's changing and that's, you're going to throw you off a little bit. It doesn't make any difference. They manipulated the price into that sell side liquidity and you bought it. That lined up beautifully with this narrative that we already knew about in terms of today's oil inventory reports. Draw, draw, draw. Buy side only oil. And with value going bid, all we had to now do was try and ride this narrative as long as we possibly could ride it. And from that narrative, yeah, I took a short sell off of this price level here, but the big picture is still very much in play, isn't it? Very much in play. We're aiming to take off the 81 evens at the top edges eventually. And I don't see any reason why 81 now wouldn't be a challenge that's worthy of a very easy target price. Now, obviously, we're going to come into a brand new aggregation. Where does the next aggregation take place? Well, of course, we've came off of this price here to that price there. We've already aggregated into that one, so that's already taken out. So we now have to go to the big aggregation, and there's the big aggregation there. Simple, easy to recognize levels that we put on our screens. What do we use these levels for? Profit taking, like everybody else in the institutional space. You use these levels just to grab a little bit of profit. A lot of people think it's all this Fibonacci pish. Yeah, can you imagine a floor trader trying to work out what 1.62 is of a certain move, having to remember what the move was? And he's sitting there going, my God, I can't even add up to 10. Never mind do a multiplication of 1.6. It's just bollocks, isn't it? So what do the floor traders do? The floor traders take the low price of the swing that they already know on the back of their cards or they've remembered. They take a high swing and they go, wait a second, the low price was 79.40s approximately. The high price was 80.15s. What's the difference? What's the difference? About 60 points, right? So around about 60 points. You don't have to get accurate, guys. It's not an accurate study. It's not a to the tick study. It's about 60 points. And what was the high price here? 10s approximately. So what's the high price going to be for the floor traders? It's going to be about 70. So the floor traders are going to be working towards that 70 print, and that's going to be where you're starting to see the price arriving into those trade areas. It's not that difficult to get the basics right, guys. You draw a couple of levels on your charts to look to deal. You find your buy opportunity to deal into. You then execute. By the way, there was a big seller there at 85 from earlier. So just note that seller, guys, at 85s on oil. There was a big seller in there. You might notice them yourself. So just be mindful of that seller if you're still holding that position. I'm just going to be watching to see if they decide they want it a second time at that price. Price is just rolling off that 85 for a second time there, guys, down to 81s. 81's traded here now at the moment. 81's traded. Now, obviously, as you drill down into lower time frames, you can start doing more of a scalp study into certain areas. See that 85 seller coming in again? See it? Down to 77s. You see how easy it was to spot that seller, guys? Crazy, right? Crazy easy, more like. Crazy simple to spot it. And then you just can do something about it. You don't have to get too worried about it. You just do something about it. Either book some monies, or you simply just say, right, I can recognize them. I'm not going to do anything about it, but I'm recognizing that they're there. Not every seller is a net seller. That could simply be a profit take. It could be somebody coming in and bagging a little bit of money. You have to tie it in with the rest of your stories. You understand? Tie it in with the rest of your stories. I want to tell you a story. So when we're looking elsewhere, a little bit of an offer watch on oil at the top edges. At the moment, you can see that sellers came in, so that's something we had a. Let's just take a look at something we've seen on the equity markets. Of course, the equities have been softer today. The market makers kind of dominated the sell side of the Nasdaq since about 1400 hours. You've probably seen that from your you've probably seen that from your max itself on the Nasdaq. So come off oil for a second here, because it's worthy of taking a quick look at this. So when we're looking at Max since 2 o'clock this morning, you can see Max has been sell side. So that's highlighting that the market makers are offered at the moment right up here, right? So the market makers are selling out of these areas. And obviously with the market makers selling, we've got to be very, very cautious about being long into this pin zone. Market makers still seems to be doing that. Now, did they try and go for a flush here? This could be one of the things that, remember, we're talking about when they come into this zone, the composite should be going up. But if they go for a flush, do we all agree that the composite should drop down? Yes or no? Yep. So does the composite drop down here? Yes, it does. What time was that? 1434. What happened at 1434? What happened at 1434 actually on the downtick was we got this bond marker coming in for the NASDAQ for a long off the bottom line NASDAQ at that stage. We actually got that bond marker. Remember somebody mentioned that they like the bond marker on their NASDAQ. So obviously we got the bond marker on the NASDAQ right at that candle, at the low of that candle. Remember, this candle finishes at 1435. So that's when you got that buy trigger right there. But you didn't just get a buy trigger right there. You got a flush, right? You got a flush. So if you can tie those two pieces of that jigsaw puzzle together, do you see what happens? You start seeing opportunities to make a little pop at that buy trade. Now, it's not a bad buy trade, by the way. It's not a bad buy trade, is it? Basically, Greg, what it means is that in the world of algorithmic trading, what happens is that they throw down a marker is basically telling the algorithm something's happened here. There's a signal that you might want to pay attention to. And if there's a signal that you might want to pay attention to, then it opens the door to possibly the algorithms coming in there and taking the buy trade at that point. Now, obviously, if the algorithms do come in and take the buy trade at that point, of course, they're taking it off that marker. It doesn't mean they're going to take the buy trade, because there could be direct influences. Remember, the bond is not a direct influence on that equity trade, is it? It's only a marker price. It's an idea that if everything else lines up, the algorithms may want to go bid at that point. It's not just as straightforward as the algorithms are buying buying equities. They're only going to buy equities if there's no equity selling coming in. So it's only a marker point, and it's a very, very useful price to start watching for that marker narrative. So obviously when we see it, if we like it, we can deal it. We don't necessarily like it, but obviously in that occasion, it has a very, very nice outcome, doesn't it? Did you see the sell coming in on that 85 again on the oil that we've just mentioned a few times? So if you were long the oil, we've talked about that 85 seller, and you can see what's happened on this chart here. Take a look at this on a 1 minute chart. Look at what happened at the 85. Now, we've just called the seller out a few times there, but look at what happened after we called the seller at 85. Do you see it? It's jammed the price once, it's jammed the price twice, it's jammed the price 3 times. That seller is doing a good job of jamming up that price at 85s. And obviously with the idea that maybe it is just somebody sitting on the offer for a profit take on their long positions, right? That would be reasonable at 4:30 as we come into the Brent open close. The Brent close, the open close, the Brent close, as we come into the Brent close, then of course there's going to be day traders in London starting to book their long profits, as every single day trader in the world was obviously long this oil. And I don't see why you would want to sell this to get net short, do you? We've already talked about that. It doesn't mean we don't recognize the seller that came in there and book some of our own monies, right? We recognize that the seller's visible, the seller is there, and we want to make sure we don't miss out on that as an opportunity. Comprende? Comprende. Not really seeing much on the trade log at the moment, guys. There's not really any real strong signals. We had a couple of bidders coming in at 14.39, 14.40 for the Qs, 14.39, 14.40. And obviously that's the buy on the break below the bottom edge. Market maker is capping the up move at the moment, however, so that's obviously a little bit negative for that storyline. Market makers offering short-term rallies. And you can see that obviously from your trade log entries. I mean, you just see it, market makers capping the short-term rally just now, and that short-term rally is exactly what's happened. If you look at the narrative versus what the reality is, so we looked at the reality here, and you can see here that we had some buyers coming in, right? So we had these hedge fund buyers coming in off of the bottom edge here. You can see there's a hedge fund buyer coming into that pin short. So there's the pin short there. We've got a hedge fund buyer here. But look at what happened very shortly after that. The market maker offered the rally. And that's quite clearly visible here. The market maker did offer the rally back into this prior break level here, didn't they? So the market makers offered that level, and they've came back round inside the pin zone. Make sense? Makes a lot of sense, doesn't it? Didn't it, mate? Alrighty, so where are we at the moment, guys? Obviously, we're still seeing a lot of selling on the Qs here. You can see that the more sellers that come in, if we start seeing them getting jammed, of course, that could open the door. We don't really see that just yet. You know, we could argue that it was starting to show up in here as a possibility, and I think that certainly does show that there is some institutional buyers at these low edges at the moment, which is fair diddles. But we're obviously just waiting for that to show up in terms of the rest of the trade ideas.